Petronas has denied reports and speculation that it is purportedly in talks with the government on a proposal to take a significant stake in financially troubled Sapura Energy. In a statement today, Petronas said it had always been and will continue to be strictly guided by an established framework for any investment or divestment consideration. It also stressed that it remains committed to working closely together with oil and gas services and equipment players, leveraging their expertise and capabilities as activities increase with the industry recovering from the impact of COVID-19. Petronas' statement comes after former PM Datuk Sri Najib Razak urged the government to protect Sapura Energy from bankruptcy by providing loans or getting Petronas or Khazanah Nasional to take over ownership of the group from PNB. Najib argued that if Sapura Energy is not saved, it would result in 4 billion ringgit in losses to holders of Amanah Saham Bumiputra, 10 billion ringgit in losses to Maybank, and the loss of 10,000 high-paying jobs. Analysts and fund managers expect the tourism, aviation, retail and consumer sectors to benefit from the reopening of borders between Malaysia and Singapore on April 1st. Market sentiment should also improve as travel between the two neighbouring countries resume. Malacca Securities Research Head Louis Lau told the edgemarkets.com that the positive impact is more towards recovery themes, aviation and tourism, and selective consumer stocks such as Berjaya Food, Bonia Corp and Patini Holdings. Meanwhile, CGS-CIMB analyst Raymond Yap, who maintained an overweight stance on the aviation sector, said in a note that he believes the removal of quarantine requirements is key to reviving leisure and business travel. Still, he believes travellers may still be cautious amid the pandemic. According to him, business travellers have gotten used to holding meetings via the Zoom and Microsoft Teams applications, while some business travel may not recover quickly as companies seek to preserve travel cost savings. He added that leisure travellers would also have to consider how being infected abroad may prevent them from flying home and result in them having to extend their stay at their own cost. He prefers airports operators like Malaysia Airports Holdings over airline operators like Capital A, citing exposure to high fuel prices. According to MyTourism data, Singapore was Malaysia's biggest source of visitors before the pandemic. The FBM KLCI closed higher for a third straight day, breaking and staying above the key 1,600 level at the close as investors cheered Malaysia's reopening of international borders. The benchmark index ended the day 4.33 points higher at 1,603.3 from 1,598.97 at yesterday's close. Gainers outpaced losers 592 to 378, while 429 counters were unchanged, 903 untraded and 44 others suspended. Top gainers were Malaysian Pacific Industries, Nestle Malaysia, Boxpack Malaysia, Berjaya Food and Sime Darby. Total turnover stood at 2.78 billion units, valued at 2.22 billion ringgit. Rakuten Trade Vice President of Equity Research, Tong Pak Leng told Bernama that the FBM KLCI remained in consolidation mode as the focus shifted to small and mid-cap stocks. He said Rakuten is maintaining its cautiously optimistic view on the market, on foreign funds' support and the cheap valuations of the local market against regional peers. The Malaysian Automotive Association or MAA will appeal to the government for a further extension of the Automotive Sales and Service Tax SST exemption to the end of this year in order for car manufacturers to fulfill their backlog of orders. MAA President Datuk Aisyah Ahmad said, depending on the models, car makers' backlog of orders stretches up to 6 months on the back of shortages of spare parts and raw materials to produce the parts due to the COVID-19 pandemic. Originally scheduled to end on December 31st, 2020, the SST exemption has been extended thrice. MAA also hopes the government will further extend the new excise duty regulations on open market value or OMV for locally assembled vehicles. Aisha said these cars may cost more due to updated OMV calculations, and with the calculation of the new excise duty, prices of cars on the road will increase 8 to 20%. She said an appeal has been made to Putrajaya and that if not extended, all car prices will go up by next year. The Department of Statistics Malaysia says the country's Consumer Price Index or CPI increased moderately by 2.2% to 125.2 last month from 122.5 in February 2021, driven mainly by the increase in food inflation. Chief Statistician Datuk Sri Dr. Muhammad Uzair Mahidin said the increase surpassed the average inflation in Malaysia for the period of 2011 to February 2022 of 1.9%. The increase in food inflation, which has the highest weightage in the CPI, continued to be a major contributor to Malaysia's inflation. According to Uzair, the food and non-alcoholic beverages group saw a 3.7% increase, largely due to a rise in the component for food at home, which increased 4.1% from the same period last year. This was mainly due to the higher prices of raw cooking materials such as poultry and eggs. The food away from home segment, which covers meals supplied by food service establishments, rose 3.6% compared to 3.1% recorded in January this year. The rise in headline inflation was mainly driven by the increase in the transport group and food and non-alcoholic beverages. Uzair explained that the transport group climbed 3.9% due to the low base effect, with the setting up of the RON 95 ceiling price effective last March at RM2.05 per litre, which was higher compared to the average price of RM1.96 per litre in February 2021.